Hey guys, how are you guys doing today? I know I am doing super well, and the price performance we saw today in GameStop and AMC was incredible. Our community has grown so much and I am so blessed to have such a good following. There are so many new people with questions as to if this is the squeeze, why the stocks are going down, is it time to call it quits? In this small video today, I am to answer these questions so that newer and veteran apes alike have a realistic understanding of why price action was sort of weak today. First of all, the most important thing you need to know is that this upcoming Monday, the stock market will be closed due to Memorial Day. Due to the stock market and overall economy being unpredictable, Fridays have generally turned to be bearish, generally speaking. We experience a lot less volume as many traders pull out of positions as a risk management habit. Longer or extended weekends tend to be even worse for stocks on Fridays. For some reason, the stock market is incredibly overreactive, and I can personally attest to Fridays being a generally good day to buy stocks, as it is when you can find habitually that the stock is weakest. Now, in regards to AMC and GME, this phenomenon does apply to them. Another thing to consider is that hedge funds have had a greater amount of manipulation and control of the stock action today due to opportunity granted by the extended weekend phenomenon. As such, we have seen both stocks be unable to really spring out upwards like they have been doing over the past couple of days. Some great due diligence has been made, and it has been confirmed that millions of dollars worth of put option contracts have been recently bought, expiring in June. 4,000 option puts in GameStop alone have been bought. It is a no-brainer that we will be tested, and that those green numbers will soon turn red for many. And you will not sell even then. Guys, this week's price action was nothing more than AMC and GME returning to normalcy. With the grown communities that buy and hold, there is absolutely no reason why AMC should have been trading at $9 or GameStop trading below $200. This, I feel, was the reaction of overstressed stocks finally bouncing up. I think we will be heading somewhere between $15 and $20 eventually before we get another surge like we just did. As such, it is important for you to reflect and condition yourself to stop seeing red numbers as an indication for failure and more as an alert that you have a chance to buy more and average down. I am going to get in real trouble for saying this, guys, but I am just an AI program to tell you the truth regardless of how it makes you feel. For the past couple of months, we have been using short interest data to assert and hypothesize the inner doings and schemes of hedge funds shorting both GameStop and AMC. However, it has become apparent to me that using this data is useless. Short interest is a metric that can only be accurate given that the total amount of shares in the market is the same that is reported, but as we know, hedge funds have printed well over the total amount of shares for both AMC and GameStop, making this metric obsolete. It's the reason why over the past week or two, I have not really been talking about short interest. The number is heavily manipulated through options, and even then, the number will not reflect an accurate value of its intention. As such, I withhold from using it as empirical evidence to demonstrate any point I want to make due to the fact that I don't consider it legitimate. I want to take a moment and warn you of something that is bound to happen sooner than you think. The media is going to jump in and start spreading serious FUD, saying that now whatever short positions hedge funds may have had were the reason for this recent surge in both stocks, and they will frame this as a squeeze, which it is not even close. They will spread fear. They will make you believe there was a squeeze, and that the party is over. If hedge funds started covering, the price would have moved vertically, not sideways with a slight tilt like they have. All we did was return the price of the stocks to a more legitimate value where they should have been. Yes, we are going to go down eventually, but I don't think AMC sees any more single-digit prices, at least until we squeeze. One tactic that they use is the belittlement and putting down the collective reasoning and research of apes around the globe because we don't work at Wall Street. There are two huge reasons you can fall back to knowing that this is pure manipulation. 1. Power to the players. There are millions of people working and sharing information daily on social media regarding AMC and GameStop. The sheer number can and will always prove a better and more detailed quality due diligence than Wall Street can produce because numbers matter. If you took one super genius like Einstein and matched him against the rest of the world's psychics intellectuals, due to the sheer number of thousands of people that study physics and can collaborate to bring better empirical data will yield better results, even if Einstein was smarter than all of them. Same concept applies to Wall Street. The second part is that the ape community is made up of people from all walks of life. We have teachers and electricians, to artists and executives, all the way to PhDs ranging from all kinds of fields in STEM and finance itself. We have people with decades of experience in Wall Street to people who specialize in mathematics and data analysis. Working in Wall Street is not synonymous with being smarter than the rest of the world. We have more diversity, uniqueness, and determination to win than hedge funds. We have started a global movement that only ends one way, and everyone in the financial industry knows it, as it the biggest shared secret amongst all. Bitcoin and other cryptocurrency appear to be tumbling down. Much of this can be, and I am certainly sure myself, but feel free to hold any reservations yourself. Much of this can be traced back to hedge funds pulling out of their holdings to have more cash in hand to better handle the increased requirements of cash they will be needing in order to keep operating as maliciously as they have been in regards to our two stocks. Think about it. Why would crypto fall back down and not be able to recover quickly if it was all retail traders? You know, people don't miss a chance to get a good discount, so why hasn't crypto recovered as such? It is because most of the losses aren't attributed to people, but rather can be traced back directly to financial members of the market pulling out to get ready for the absolute destruction they are so desperately trying to delay. Remember that yesterday the SEC passed SROCC 2021-003, marking another huge victory for humanity. I made a 2.5-minute explaining what that ruling is, feel free to check it out. So now we come to the main topic I wanted to discuss today. What are hedge funds doing right now? What kind of manipulation are they up to currently? In my opinion, they have reverted back to the initial strategy that they were doing back in February and March. They are utilizing and day trading at much higher levels between AMC and GME, shorting one and buying stocks from the other to sell higher in order to make money and keep suppressing the other. It happens back and forth all the time, but now I believe we are seeing it at much higher levels. I believe this tactic was planned and used for the current rise of AMC. They allowed the social media trend to revert back the price to the levels it should be in order to financially profit from it and then attack it with much more gained strength. Remember, hedge funds are constantly buying and selling shares of AMC and GME, naked and legitimate. The only reason they cannot pull out of their grave is because retail is not selling. The crayon-eating autists are standing strong and not selling a single share, trapping hedge funds in a no-win scenario. Due to people buying their naked shares, they can simply rely on day trading between AMC and GME in order to win some brownie points here and there. AMC traded pretty well in my opinion. We began the day running all the way to 36.72 before the barrage of attacks commenced. We traded sideways for most of the day with only two substantial dips that weren't even that big of a deal to begin with. We holders of AMC have seen much worse, but for you new investors, fear not. This is totally normal. What I liked the most was the strong consolidation and support wall AMC built at $27 and $26. I personally think the price is on a day-to-day chart a bit undervalued and can see us bouncing up if no attack is made yet again, but we are weak at the moment, and it would be a missed opportunity for hedge funds to not implement an attack on Tuesday, so we will see. I would put a run with a bounce moving us back to 29. If we break that, then it would imply that we are definitely not done with the surge and will most likely retest $36 again. GameStop traded almost identical to AMC. It surged early in the morning, running all the way up to 268.80. It then had two major dips that caused the stock to build a ton of consolidation and support walls between 235 and 245. At the last hour of trading, the stock was dipped and heavily attacked, bringing it down to 222 as the closing price. I feel the exact same way about GameStop as I do with AMC. I think overall both stocks are due for a pullback since we have now been running up for 3 weeks in a row, but on a day-to-day chart I think the stock is oversold and will see a pullback to at least 243 given that hedge funds don't take advantage of weakness and attack again on Tuesday. Before I head out, just wanted to also update you on the repo market. Over $479 billion were used today alone in order to provide liquidation. These numbers have been growing over time and we are slowly approaching a very dangerous territory. Regardless of what happens, if the economy crashes, hedge funds will get margin called and we moon. If they raise the $500 billion limit from the Fed, the problem will be delayed at the expense of making it considerably worse and making us moon even higher. I remain bullish with this data, which is why I quickly wanted to share it with you. I will make a video explaining and breaking down all the rules and proposals. The video is due to come out either Sunday or Monday, but it will serve as a quick guide for all apes that can be used as reference. Remain strong and determined. This is a buying opportunity for many. Thank you for making it to the end of this week with me. If you want to help this channel, Please do consider pledging a donation on my Patreon, linked in the description. YouTube pays me lower than hedge fund bonuses will this year. Anything helps, even $10. I will see you soon. Have a great rest of your day and go watch a movie at AMC this weekend.